Hello everyone and welcome to today's morning report on Tuesday the 8th of March with me, Rich Pro Market Analyst at Handset Markets. Trading session has got off to a negative start and that's come on the back of this Chinese trade data that we had overnight. This was always going to be a bit of a risk event and it certainly seems to have proven to be the case. Now here we see the trade data that was minus 25.4%. That was well below the 12.9 um, 12.5% decline that had been expected, and also on the imports as well, worse than expected, 13.8%. Let's look at that on a graph quickly, and you can see that the 25.4% is the worst since 2009. Really, really negative. That is. And also the imports not great either. So what we have seen there is that has had a big impact on market risk across the board, pretty much. In terms of indicators that I look at, we sort of general indicators. You look for a general theme, don't you? Dollar yen. Sharply lower by 0.5%. That seems to be gaining traction again to the downside. That is a big indicator. We've got gold that's going higher, and again also treasury yields. Let me just show you your treasury yields. Treasury yields 10-year going lower, and the 2-year also towards the day low as well. So this is having an impact on markets. Does it derail the recovery? Well, it'll be interesting to see. The dollar certainly has sort of come off the top in recent days. But the big move has come not really in oil, interestingly. We had a sharp move to the upside on oil, big breakout above 34.80. We're now testing the next key resistance area, aren't we? Around 38.40 is that January high. 38.40, that's the next test for WTI oil. And it's interesting because we're seeing metals prices falling as well. So certainly a big turnaround in sentiment today. Will it continue? Now, in terms of our economic data today, we've got not a lot. We do have the Eurozone revised GDP data, which is expected to be coming in at 1.5% on the annualized data, and 0.3% on the quarter-on-quarter data. But not only that, we've got Mark Carney speaking this morning on Brexit, where the MPs for the UK are going to give him a grilling on what the Bank of England are going to be planning for Brexit, basically. And I suppose the market will be looking out for signs of that, so you could get a bit of pressure on sterling today, or certainly volatility around sterling this morning. But that takes me to my charts today, and this is sort of linked. Sorry, excuse me. This is sort of linked to that China story because the DAX has been or is linked to China because of all the exporting nature of the DAX companies, and we can see here the technical recovery we've got on the DAX. Nice uptrend since that February low. Let's zoom in. And the fib levels, I mean, I've talked about this so many times. The fib levels on this DAX chart are amazing. Fib levels of the 8355 to 12390 rally. And look at that, 61.8% again coming in as the basis of resistance within sort of 2 ticks of that fib level. Amazing amount of times that these fib levels happen on this DAX chart. And now we're seeing a retreat back towards 9,600. That was a breakout level. That was an old support, became resistance. So that is your pivot level. You broke out above that last week. You come back to test that. That also coincides with the uptrend as well today. So we're seeing this move, and you need to see this. I think this support at 9.6 hold on, because if you see 9,600 broken, I think you're coming back towards the next fib level at 9,308. Which is the 76.4, which again has been a key pivot level on this chart. So we need to see this 9,600 level support holding. Your momentum indicators, which had been on an improving scale, just rolling off the top, you wouldn't really want to see another negative day after today, because then you'll start to get a crossover sell signal on your stochastics. But that would also probably coincide with a breach of the 9,600 support as well, so that would be again corrective. Your intraday hourly technicals have broken the initial support at 9,690, and not only that, you sort of come back and use that as your resistance today. So that is your initial resistance on the upside, 9,690. That you'd need to see a recovery back higher through. For now, you're not overly concerned yet, I think, until you get a breach of that 9,600 level. I mean, 9,580 is on the intraday hourly chart as your sort of pivot line, but I'm taking it as 9,600. But 9,580 is your sort of absolute support there. But until you get that breach, I think you're still in a reasonably positive mindset, because you're still in this uptrend. You're still seeing the dips bought into. So if you can see the bulls coming back in around that 9,600 level, I think we could be in a pretty positive mindset still on the DAX for another retest of that fib level. Ultimately, again, 61.8% at 9,897. So this is a pretty important time for the DAX now. We need to see this confluence of supports holding around 9,600. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.